What's the instant analysis? Inflation fades a little bit, the consumer's feeling a little bit better. That feels a little bit logical to me.
I think what consumers are telling us is completely logical. This is a continuation of a huge surge in consumer confidence that started in December. We had a 14% jump in December, and that was followed by another 13% jump in January. So I think what the consumers are telling us is that they truly believe that inflation has turned a corner. For the previous few months before that, they really were reserving judgment, but they're feeling considerably more confident than they were just a couple of months before.
How quickly, Joanne, can these numbers change to the upside? That, like, if inflation continues to fall, how fast can sentiment really continue to jump up?
Well, what we've seen these last 2 months is the largest 2-month gain that we've seen since 1991, since we were coming out of a short recession. And so, I mean, that gives you some context for just how large these improvements are. You know, there's been a lot of conversation about how consumers are feeling so bad about the economy despite strong numbers. But really what we were seeing was that consumers were reserving some judgment. And now that now they're feeling much more confident, not just that inflation has come down, but they're feeling more confident about labor markets as well, and have considerably stronger income expectations than they did just a few months ago.
Joanne, interestingly enough as well, these 2 months correlate with 2 months that we've had since Powell basically pivoted and delivered a fairly big, via the financial markets, fairly big amount of stimulus back into the economy. Rates have fallen significantly. To what extent do you think that's being priced into what you're seeing with the consumer as well?
We are seeing that to an extent. Consumers are showing fewer concerns about high interest rates with respect to buying durable goods, cars, and even homes to an extent. So, that has certainly come in. And in addition to that, consumers are broadly expecting interest rates to fall in the year ahead. So they're not expecting further tightening. So even though consumers aren't really, they're not following Powell's remarks, they are responding to the interest rates that they see in the world around them.
Do Democrats and independents and Republicans feel differently in this survey, even though inflation is coming down for everybody?
So it's always the case that people who belong to the party that's in the White House tend to have more favorable levels of sentiment than people whose party are not in the White House. And that's no different this month. What's really interesting is that for every single demographic group, and that includes, political identification, Democrats, independents, Republicans, overall, they have higher sentiment than they did last month. And they're overall at the same level of sentiment that they were, half years ago, and regardless of political party. Yeah. So overall, consumers across the board are seeing substantial improvements over the last year.
But there has been this issue for the Democrats, for the Biden administration, that despite a relatively good economy, consumers have not been feeling good. And that has certainly been represented in terms of the polling numbers. Does your data, certainly over the last couple of months, support the idea that that is changing and changing in a big way? It certainly appears so.
That's what it looks like in our data. We were seeing, a stalling of the improvement in sentiment August, September, October, even though, many areas of the economy were continuing to improve. But again, December and January, we saw a nearly 30% jump just in those 2 months. Consumers are feeling considerably better about the economy than they were just a couple of months before. We're not a political polling organization, but I would expect some of that to bleed into or to spread into consumers' feelings about economic policy and politics as well.
Hey, Joanne, does this point at all to a reacceleration in the economy versus a stabilization?
I think it's too early to tell. One of the reasons for that is consumer spending continued to be very strong last year, even though consumer sentiment was so weak. Now, of course, consumer sentiment was lifting off an all-time low, so we have been seeing an upward trajectory, except for those few months in the fall. And the reason for that is that strong income expectations, strong income, strong labor markets have been supporting consumer spending. I think the good news looking forward is that, despite the fact that labor markets are so strong and it kind of looks like there's nowhere to go but down in that sense, consumers are expecting labor markets to continue strengthening in the year ahead, and that will give them more confidence to spend.
Joanne, I'm going to ask you the question I always ask you. If you're the Fed, what do you make of this data? What do you do with this data?
I think that, the Fed, of course, is watching these inflation expectations very, very closely. And I think that it should be definitely very heartening for them, the improvements in inflation expectations that they've seen the last 2 months. The fact that inflation expectations only edged down a little bit in January is not a bad sign, because it follows December, in which there was a dramatic improvement. So I think things are moving in the right direction. And I think the Fed should be heartened in the fact that consumers seem themselves a bit more confident in a soft landing.